Hi, it's Stephanie Evelo here with the Evelo Team at Keller Realty, and we are live again for our monthly real estate market update. And joining me today is Bob Werner, one of our senior realtor partners and expert on the market here. So, Bob, what are we going to cover today?
Yeah, we'll just kick straight into it, make it as short and sweet as we can. So the last several times we've done this, we've kind of been looking at these charts going back 5 years just so we can really see how dramatic the shift has been over that 5 year period. So first up is the median sales price for our market. So again, keep in mind, these are for stats ending the end of February. So our median sales price was $250,000. That was up 2.9% over January and up 13.6% year over year. So again, real dramatic changes. I'll just go quickly here. If you look to January of 2017, February 2017, it was down near 140, and our chart has just continued to go up to where we're at 250 now. That next one up is
that's a huge jump for Indianapolis, right?
Absolutely.
I've never seen those numbers and that percentage in 1 year, right?
Yeah.
That's amazing.
Everyone's finding out the secret of Indianapolis and the surrounding area.
Right. That's why we're
next up is
our
median days on market. So that continues to kind of dwindle / stay pretty even. So we've been fluctuating around 5 or 6 days for the median days on market. So we were at 5 for the month ending February, which was down a day over over January. So not a big deal, and right in line with where we were last year. And then these next two, this absorption rate or month supply of inventory, we've talked about that a lot. A balanced market, again, is about a 5 to 7 month supply of inventory, really going back to when the pandemic started in February, March 2020. We've been below a month that entire time, and we're there again with a 0.7 month supply, which is down some over January and down almost 10% year over year. And then the last one, real quick, we look at that average percent of list price received. So we're still above 100%, ever so slightly. We have come down. I'll show this big peak here. So June, July of last summer, we got up near 103% on average. So we kind of have dwindled back down close to 100%. But you can see that peak is rising again as we get into that spring and summer selling season, and we'll probably see that peak grow again and then reach its height in June or July of this year.
Yeah, since we've kicked off the first day of spring, right? Everybody's springing into action out in the marketplace. So what does 0.7 month supply of inventory really look like? What does that look like?
Yeah, so what we started tracking a little while back is kind of looking at these 5 kind of suburban areas just north of Indianapolis. We do a fair amount of business there, and we just kind of looked at the day that we do this presentation, how many active listings are there, and then how many active listings are there under 250,000. We really started tracking it when we went under 500 listings. That was just a number we would have never thought possible across this broad geographic area. And then last month, for the first time ever, we actually went below 150. We've actually come back up a little. We were just a tick under 200 today when I pulled these. You can see here, but then again, only 6 under 250,000. So we continue to see that median price go up, and then that's a few less homes that are available at those price points.
And to imagine that our median price point of 250, right?
Right.
Yeah, when I started in the business years ago, my average sales price was, 90,000 to 100, right? So
yeah,
crazy numbers we're seeing and experiencing. So how are interest rates? What's going on in the mortgage side of things?
Yeah, so that's one area we always like to touch on at least a little bit, keep you informed both from a housing supply and inventory and pricing standpoint, but also from an interest rate standpoint. That's important because the higher the interest rates go, the lower your overall buying power is if you want to keep your payment the same. So we're definitely in a spike, right? So for the week ending last week, the average 30-year fixed mortgage rate was 4.16%. That's up nearly a whole percentage point just in calendar year 2022. So we've been helping forecast for a while. The experts predicted that we would start to see interest rates increase throughout 2022, and we are definitely seeing that. and we've increased a full percentage point just in the first quarter alone. And at least in the short term, that number is expected to continue to rise.
And even though it's gone up a percentage, that's still relatively low in the big scheme of things, right? I mean, you're being able to purchase a property still at 4% interest. I mean, that's just crazy, really, right? In a positive way. So, any final thoughts on the market?
Yeah, we always like to end with something positive. So this is just kind of a new graphic that came out. It kind of shows across the country. Obviously, as those median sales prices increase, what's that doing to current homeowners' equity? It's increasing right along with it. So you can see the whole United States here. On average, the national average was a $55,000 equity gain year over year last year here in Indiana. The average homeowner saw a $33,000 equity gain, right? So if you've been contemplating making that move at all, right, I would just say reach out, let us help you identify what that equity gain might be in your home. You might really be able to tap into that equity and make that dream move, or make that downsizing or right sizing or moving to something newer or larger that you've been thinking about in particular over the last couple of years. We can really help you identify where you're at currently, and where you might be able to go if that's something on your wish list in 2022.
Yeah, well, thank you so much, Bob, for sharing today. We always appreciate the data to know, help our clients and friends and those listening to make smart investment choices in their real estate needs. And so we just want to say thank you again, Bob, for sharing, and thank you so much for joining us today. If you have a real estate need that we can help with, let's connect. You can contact us at info@eveloteam.com or 317-863-9011. And we'll post that here in the chat here as well. Thanks so much for joining us. And remember, as always, make each moment count. Bye-bye.